This is Alan Bush with the Daily Financial Forecast for Tuesday, June 26th. Small consolation, but it appears that the U.S. equity markets are holding up better than the Chinese stock markets, with some of the major indexes in China now falling into the bear territory, declining 20%. Although we did have last week the Nasdaq and the Russell advancing to new record highs, so somewhat of a better tone to the indices, even though the Dow and the S&P futures are still quite a ways from their record highs, especially the Dow. Also, we are seeing prices higher today, even though the consumer confidence report did come in a bit weaker than expected. Moving over to the currencies, on Thursday of last week, we did see the dollar index on the daily chart posting a one-day key reversal to the downside. That also occurred on the same day that the Bank of England held its policy meeting. At that meeting, they were a bit on the hawkish side. So it does look like interest rate differential expectations may be turning a little less bullish for the dollar index and a little more bullish for the British pound, and also to a lesser degree the euro currency. And that has been reflected in prices over the last 4 days or so. Moving over to the interest rate markets, we are seeing prices lower today. Even though the trade situation has not gotten any better, there is apparently less and less motivation for funds to flow into flight to quality vehicles. In fact, the bonds lower now. Also, even though we did have the consumer confidence on the weak side, so the bonds very much underperforming the news today, coming in lower. That suggests that the trend is lower for the credit markets, especially at the long end of the curve. Also, I do believe that the global economy will continue to expand in spite of these trade tensions, and that should in turn result in lower prices for the credit market futures. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.